Well, Kirian, one of the incidents of sovereignty is the power to impose taxes. And of course, taxes are one of the major sources of revenue for most governments around the world. And those taxes, of course, could include companies tax or personal income tax. And in Nigeria, the taxing system, of course, as we know, in modern times dates back to the pre-colonial era and, of course, the colonial era, where the authorities were, as it were, local authorities were in front of tax collection, as it were.
Exactly, Kingsley. Yes. And the tax system back then was very stringent, as persons who did not pay tax who were forced to face the music. It was said that the agent collectors could take any item equivalent to the tax owed in the case of a defaulter when they come calling for tax payment from taxable adults.
All right, Kirian, that's one other question to ask is what are the sanctions for those, who are in breach of Nigeria's tax laws, particularly manipulation of tax incentives? And also, how often does the country get to review its incentives for particular sectors of the economy? These are questions, of course, we shall be posing to our guests later on in the program. It's Good Morning Nigeria, very wet morning here in Nigeria's Federal Capital Territory. My name is Kingsley Osadolo, and I welcome you to the program being broadcast as always live on the network service of the Nigerian Television Authority.
And I join Kingsley in welcoming you to the Monday's edition of Good Morning Nigeria. Well, my name is Kirian Umayo.
All right, now joining us in the studios here to discuss this subject matter in greater detail, would like to welcome Saleh Abubakar, who is a tax and ICT consultant. Saleh, pleasure to have you with us on the program. Also here with us in the studios is a legal practitioner and a tax expert, Oluwaseun Kadri. Oluwaseun, pleasure to have you with us on Good Morning.
Thank you very much for having me.
And Henry Uche is of Oxfam International Public and Private Sector Transparency and Accountability Office. Indeed, is the officer in charge of Oxfam Nigeria in terms of that subsector. Henry Uche, pleasure to have you with us on the program.
Thank you very much. Thanks.
Okay.
All right. And from our Lagos studio, we have Adesina Adebayo. Adesina Adebayo is the Vice President, Chartered Institute of Taxation of Nigeria. Welcome to the program.
Thank you for having me.
All right, Kirian, I think we better start the conversation from our Lagos network studios, where we just introduced the Vice President of CITN, Adesina Adebayo. Mr. Adebayo, our principal focus, of course, today has to do with the exploitation and abuse of tax incentives. What range of tax incentives are there today in the Nigerian economy? And who are the major beneficiaries, and what kind of abuses are we seeing?
Thank you once more. The issue of tax incentives has always been there with us. And we have the range of tax incentives, right from even talking about pioneer legislation, and then you have incentives relating to infrastructural relief. You have incentives that are even industry-based. And with this incentive, it is meant to stimulate the economy. Now, the challenge we have is that, one, how do you actually measure the effect of these incentives within the economy? What is it costing us, and what are we benefiting? These are the challenges we have to start talking about managing today. While it is good that we should give incentives, the benefit of the incentives must be felt within the economy, and it must be measurable in terms of impact. Otherwise, we lose it out. And this is the challenge we are talking about today.
Let's come back to Abuja, to Saleh Abubakar, ICT and tax consultant. We are looking at incentives and, of course, the challenges that's been beclouding in Nigeria, say, incentives, let's share what you know concerning incentives and, of course, the challenges therein.
When we talk of incentive, we are talking about the benefit that someone will enjoy or given to someone to encourage that person do something specific. So when we talk of tax incentives, usually we're talking about reducing taxes for businesses or individuals in exchange for specific desirable actions or investment from them on their own part. And that is to the purpose is to encourage these people or businesses to like offer some services to the community, a kind of an encouragement to have a social behavioral commitment to a community to achieve something, which can be given by or offered by the federal government, state government, or local government, or anybody that has the responsibility of collecting taxes so as to achieve a certain result. So thereby, when you aim at businesses, organizations, or individuals and give them incentives to do that thing, and some of them try to abuse that privilege by either not doing it or not doing it good, then at the end of it, the aim of giving the incentives is defeated from the beginning. And these incentives come in several ways. So depending on the type of incentive that is given and where it should be applied, it comes in the forms of either tax deduction, tax credit, tax forgiveness, or even tax for service.
Still on the range of tax incentives that we're looking at, what is it that we know at this time about those incentives, and what kinds of manipulation are we seeing from the beneficiaries otherwise of the incentives?
All right, thank you very much. Essentially, tax incentive is not bad in its totality. It's just the application of it that actually is the problem that we face in this part of the country or part of the world. Yeah, so like you mentioned, we actually released a report just this week, or last week rather, called the Fair Tax Monitor in Nigeria. The report actually intends to do a comparative analysis of how well we are doing in terms of tax structure and regime across in the country, basically. Then some kind of comparative analysis in terms of how are we doing in certain area, like how progressive is our tax system, how much revenue do we get from tax, and looking at how pro-poor those kinds of spending that we get from, that we use taxes to spend on, and then how does it contribute to the budget eventually.
Now let's go to Oluwaseun, who is a tax expert. Now the incentive we're talking about is designed to incentivize or encourage a particular economic activity or activities, as it were. Now we are talking of those that benefit from incentive, who do not bring about a commensurate action, so, you know, after being incentivized. What is the challenge, and how do you get out of it?
For me, I'll give you a practical instance where incentives actually work. And a very recent innovation from this past administration was the Road and Infrastructure Development Tax Credit, which was given to certain companies, and in order to develop our federal, or we don't know if it's federal or state now, but for generally roads, you understand, probably because the government doesn't have the funds to develop those roads, you know. And you will look at such an innovation in such trying times for Nigeria as very, very laudable, and that's actually the kind of credit we need at this instance. But you know, there's been various abuses over the years. Like in 2011, for example, between 2011 to 2015, there was over 1 trillion lost in tax incentive, and the reason is probably because the monitoring scheme is very poor. That's monitoring the incentive themselves, and we rather give incentives to individuals rather than companies that actually do need them.
Back again to Adesina Adebayo in our Lagos Network Center. In looking at the regimes of tax incentives that we have, where have we had, in your opinion, the most benefit? Is it from the pioneer status, tax holiday, or tax credit, such as we have seen lately with the tax infrastructure, that is sort of develop infrastructure, and then we give you credit? A number of companies in the past, you know, had tax holidays, others were giving pioneer status. What is it that we have observed as an institute?
Thank you very much once again. One of the things we need to actually bear in mind before I address that question is the fact that let's take a look at even our 50 years gap. Between 1969 and 2019, the population of Nigeria was actually around 50 million in 1969, and we are talking about 200 million plus in 2019. And then you ask, what should be the priority of government to stimulate investment in order to get a lot of people having a job? Look at the tax holiday given to the telecom companies. At the point of giving them the tax holidays, it is actually meant to enable them to put infrastructure in place, employ a lot of Nigerians, and stimulate the economy. And that becomes a plus on its own. And then you look at the aspect that even Sheon just mentioned relating to the road infrastructure. You have a situation where that if the road is developed, whether it is federal or state, and then the issue of the gridlock we have in Apapa, for example, becomes something that becomes a thing of history, especially when the roads are properly constructed and done very well. Now, going further, you have a situation where you cannot evaluate what is the benefit you are getting from this tax credit. What do we have related to that? We have the rural investment allowance, and you have a situation where you have infrastructural facility, there is a benefit to that. You talk about there is no facility at all, you have 100% rural investment, if it is a certain kilometer away from where you are located. All these are benefits that goes about with issues of investment.
Yes, so we'd like to, Henry Shea to come in here. It's the same question, you know, looking at why we don't get the result, especially when incentives are given to big-time companies in this country.
Yeah, so essentially, I know incentives basically they are given to companies within certain areas like manufacturing, maybe agri products, and maybe oil and gas as well. And that's why you see most of these very big companies, you know, who operate within the oil and gas sector enjoy a whole lot of these incentives. And thing is that you tend to see, you know, like within our laws anyway, it's allowed you give them first 3 years, first 5 years, as the case may be, and then maybe renew for another 2 years, and maybe get another 5 years again. But what we see within that realm is that most of these big companies, you know, they have a couple of board of directors now, and then after 3 years, they just change the name, and then come back again as the same company, enjoy the same 3-5 years again, and then it can go on and on for 20 years or more, you know, enjoying the same incentive. So we have a system that doesn't really actually check these kinds of anomalies. You know, we have a system that doesn't actually, you know, pay attention to who are these board of directors, who are these companies, how are they registered, do they actually, you know, do their annual returns, you know, and all of that. How are they being monitored to ensure that these same guys don't come back, enjoy the same incentive over and over and over again.
Oluwaseun, yes. Look, let's come back again to the big players, yeah, and the kind of incentives that they get away with. Yeah. How scrupulous is our surveillance system to ensure that some of these legal shenanigans that we get to hear of, you know, a company getting into business, fading out, fading off, and then reappearing again, and continually having a pioneer status, and also enjoying tax holidays. How rigorous is our surveillance system?
You know, Nigeria is has been working assiduously with respect to data, you know, and using technology to harness as much taxes as we can, you know, and in this particular instance, it should also apply. The first problem we have is multiplicity of agencies that deal with these incentives. You know, when so many agencies deals with incentives, there will tend to be gaps and leakages, and monitoring it will be quite very difficult. But this is what technology can do. You know, technology can bridge this gap between these agencies. We can set up a particular department within the Nigerian Investment Promotion Commission, and you have a representative from the Nigerian Customs. You know, you have a department that's brings people from all these other agencies together in one place, and they monitor critically these things. And you also have to integrate data. You have to collect the data of the people that are even enjoying these incentives in the first place, and you have to monitor the activities very critically. And you know, the solution to not abusing incentive is very clear in the revised national tax policies, and it says, let us monitor and evaluate this thing. Let us ensure that these incentives are broad and are sector-based. Let us ensure that the people that are meant to enjoy these incentives are actually the one enjoying this incentive. These things are not going to work, you know, like magic, you know, so we have to integrate technology in order to bridge this gap.
All right, Saleh Abubakar, it is almost clear from what we know and what we see that look, a tax holiday in Nigeria will be 5 years. 3 years in the first instance, then of course renewable for another 2 years. In the vast majority of cases, unless of course the company collapses or otherwise, it will be 5 years. But the question is, after the grant of that holiday and for you to take off, are the granting authorities in a position to also supervise that company to be sure that the timelines it has set for what it will invest and how the business will take off, is that those timelines are actually being complied with, that the business is doing what it was incentivized to do?
Actually, I believe for a project, any project, it has to follow the project management methodology from initiation up to closing, planning, execution, monitoring, and control. So I believe if a particular project is going to be incentivized and given to the people, there has to be a project timeline for it. This is what we are supposed to do, and this is why it will take us from this number of years to this number of years, so that if we know, okay, this is the tax we are supposed to be paying every month, so at the end of this year, this is what we are supposed to be paying. So if you are given tax holiday, that tax holiday is supposed to cover exactly what you're going to have, including maybe part of your profit based on what you invest in that. So I believe both for the company that is going to be given the incentives and the monitoring organization, they are supposed to have this project timeline for the project based on what the project is supposed to do for the particular community we're talking about, so that there won't be any gap or any issue that will now be raised at the end of it, that after giving us this tax holiday for 5 years, we're unable to recoup what we've invested in this one. So for you to have that one, I believe before you even start any project, you have to know that even after giving the tax holiday or incentives, that project is going to come within the timeline and is going to be implemented within this timeline of the 5 years, including getting profit for what you've invested in it. Else, there is no need starting a project that you know at the end of it you're going to lose. So both the monitoring body and the company that is incentivized has to have a project plan. In fact, before you are even given the project, you're supposed to submit a project plan for whatever it is you want to do, and that is exactly what the Federal Inland Revenue is supposed to even use in giving you the certificate.
Which is where I want Adebayo to concentrate on. Now, what nature of or kind of incentives do Nigerian government give? And if such incentives are concentrated on a particular area of business, it does seem that many other important areas are neglected. Give us an analysis of what you understand by the kind of incentives that we give.
Very much. Relating to the issue of the kind of incentive we give, the issue of a resource cost and compliance issue also come in. Now, naturally, the government has a broad objective. They want to stimulate development in so many areas as much as possible. And this requires that they need to actually look at it. What will it cost us in terms of resources? If we decide we want to do this on our own, do we even have the managerial capacity? Do we have what it takes to be able to stimulate the economy in this area? If the answer is a no, and you want to encourage people to invest in that particular area, then you now have to look at it and incentivize them, so that at the end of the day, they are encouraged to move towards that side. Now, if I have to use a simple analogy, if I realize that in my family, for example, we need a little bit of medical doctors in order to do that, then I may actually set up a fund and say, look, if you decide you want to go for medicine, we will take you from beginning to the end. And that will encourage a lot of people who do not want to even read relating to this science issue to go along that side. And before you know what's happening, do a simple arithmetic calculation. In 10, 15, 20 years' time, we may have so many medical doctors within the family. And that means it is clear that I actually encourage them to follow a particular line of direction. Now, the government looks at the economy in totality and says, look, do we have the resources for this? Do we have the expertise for this? That becomes the basis for saying, look, let's get this done. through these incentives, and then including reliefs and allowances peculiar to that particular sector. Now, from talking about the issue of compliance, now the compliance aspect has to now do with one, how do you ensure, for example, that the cost already relating to this as a compliance issue, where do you get the benefit as a government?
Mortgages are virtually absent in Nigeria in terms of, you having to use that mortgage facility as a secure credit for you to acquire your own property. But we know that if you look around any Nigerian city in the past 20 years or more, you have seen the skyline has changed. People are building. As we are here now, I'm sure people are rushing to site, even when the rain is falling, to go and do one work or the other. Is it possible for persons who are constructing outside of the mortgage system for them to get some relief? Because if you're in a place like Lagos, for instance, by the time that house is ready, you will pay land use charge. Is it possible for government, therefore, to incentivize persons who are engaged in construction, and then you have proof to show that, first of all, you have a title, although if you go and build on another person's land, that's the cost, the loss will eventually be yours. Once you are engaged in construction, you know how many years it will take us here. A mortgage is usually max 30 years, but if you are constructing, it will take you a few years. Somebody is building 1 3-bedroom bungalow. I'm doing this quietly. Can the person be getting relief? As personal incentive, so as to, at the end of the day, help shut that up.
I think the best way to do that is basically you deal with the land first. How can people have access to land easily and at a very cheap rate? When you do that, you ordinarily would have given incentive for even acquiring the land in the first place. Then you now look at incentives for the materials to build. Like, for example, the block industry, what can you do for them in order to ensure the blocks are cheaper for people to have access to it? What about the cement industry as well?
Wait, block. Sorry, we are talking block. You see, the block, when you go to mine the sand for block, sharp sand, they will tax you there.
True.
Where you sound like you're laughing, isn't it?
At every stage you are taxed.
You are taxed.
I know that about that.
But that's the best approach. For cement, for example, that's one of the most expensive resources in building. If you can grant incentive to maybe the people in that industry, for example, and make this thing cheaper, it will be easily accessible.
But if individual incentive is prominent, right, why is it lacking? Why is it at a zero ebb in Nigeria?
It's not exactly at zero ebb, if you ask me, because a lot of these insurance companies, approach companies to say, like organizations, to say, okay, how many staff do you have? Can they access our mortgage facility? And then use that, to drop their tax liability in a way. So like we have been approached a lot of times, and then, they'll ask, okay, fine, are you interested? They'll come to lecture you on the facilities available, and then how much tax it to help you drop. For example, those are direct incentives, if you ask me. So for example, say you're paying 50K per month in terms of your tax, depending on what your salary is. So, so those kinds of mortgage, if you can access them, it drops your tax to some rate, maybe to like 30K. So those are there's a way accountants do it anyway. I'm not an accountant. So yeah, so they try to help you use those kind of facilities to drop your taxes. So those are some direct ways of assessing tax. Yeah.
All right, Henry Uche, would like to thank you very much. You are the Public-Private Sector Transparency Accountability Officer of Oxfam in Nigeria. Thank you very much for your contribution to our discussion this morning.
Thanks for having me.
Appreciation also to Oluwaseun Kadri, legal practitioner and tax expert. Thanks a lot for being around.
Thank you very much.
Saleh Abubakar, another tax consultant and ICT consultant as well. Thanks a lot for being with us in Good Morning Nigeria.
Thanks for having me as well.
From Lagos, we were joined by Adesina Adebayo, who is Vice President, Chartered Institute of Taxation of Nigeria. Mr. Adebayo, thank you very much also for being part of our discussion this morning.
Well, and that's Good Morning Nigeria for today. We thank you for watching, and please return again tomorrow when we come back with a fresh edition of the Morning Show. My name is Kirian Umar. Enjoy your day.
And I'm Kingsley Osalolo. We'll have a lovely day ahead.